Assalamu Alaikum everyone, welcome back to the channel. Dividend stocks can provide investors with predictable income as well as long-term growth potential. However, not all dividend stocks are great investment and many investors aren't sure how to start their search. Dividend growth investing can also mean something different for each person. So today's video I'm going to share with you 5 companies that every dividend investor should own and why. These are companies that I currently own in my dividend growth portfolio. I will share with you that at the end of the video, so please stay till the end of the video. So when I first started investing, one of the things that I had to do was, to do my research, find out companies that are Sharia compliant. Once I've got those, and then I had to look at the financial details. So I had to look at their, balance sheet and all that stuff. Once I start doing that, I realized there's a lot of companies that are, in debt and so on, and companies that have been paying their dividend and so on. So one of the articles that I came across, one of the things that I came across early on was this. I came across set of companies called Dividend Aristocrats. These are companies in the S&P 500 that paid and increased their dividend over the last 25 years. So over 25 years, they have been paying their dividend and have been increasing. Now, this is great. Some people will just say, oh, this is excellent, okay, and straight away investing in these companies. You really have to be, careful with that sort of a thing. Even though companies have been paying their dividend over the last 25 years and increasing, it means, sometimes it doesn't mean that basically this company is making profit, is a good company, and so on. So there's a lot of other things that you need to look at. Things like the payout ratio. So once I've learned all of that, I just had to look at these companies and look at, for example, 3M, have a look at their payout ratio. So how much of their, income are they basically basically using to pay back the dividend to their investors. And if some companies that are paying over 70%, 80%, 90%, over 100%, some of them. So some of these companies are going into a debt to actually pay the dividend. And that is not something that you want to see. So I looked at this list, and if you look at this list right now, you see 3M, Coca-Cola, Colgate, Dover, Emerson Electric, Genuine Parts, Johnson & Johnson, Procter & Gamble, some great companies that have been around for a very, very long time, have been paying their dividend over 50 something years. Now, once I've started looking at this and I thought, okay, this is great, what else is out there? Then I found out there's also a set of companies called Dividend Kings. And some of the ones that you've seen already will be in this list as well. So Dividend Kings are companies that have been paying their dividend basically over 50 years. So they have been paying their dividend over 50 years, which is great to see as well. Again, Dover is in there, Emerson Electric, Genuine Parts, Procter & Gamble, 3M, and so on. Johnson & Johnson, Coca-Cola, Lowe's, Colgate. Now, these are some really, really good companies that have been around for a very long time. And once I've got this list, I just started, okay, I need to make sure they are Sharia compliant, they're going to be around, are there demand for their products? So all in terms of the fundamentals as well as the technical side of things. And once you've looked at that and there's a demand for Johnson & Johnson, medicine and baby care and all that stuff they do, and then basically you've got a good list of companies that you can invest. Again, if you're a dividend growth investor, then this is basically the best list to look at. Okay. So next, what we're going to do is we're going to look at 5 very stable blue chip companies that will pay you while you sleep, and you don't have to worry about dividend being cut and so on, because they love to pay dividend. They are very, profitable companies. They've been around for a very long time. Now, the first one that we're going to look at is Emerson Electric. This is a global leader in providing solutions for various markets, including commercial, residential, and industrials. Now, these are companies, this is one of those companies where the oil and gas companies, the automotive companies, the chemical companies, the food and beverage companies will go to get the equipment they need in order to do their job. So it's been around for a very long time and will be around for a very, very long time, because a lot of the things they do basically will be in demand, and a lot of the huge companies use their products basically all the time. So let's have a look at a little bit more details of this company. Currently they're trading at $84, just slightly over 84. They're up about 15%, 16% this year, so that's really good to see. Market cap of $51 billion. Their yield for dividend yields at the moment 2.37, and they will pay you this much, $2.02 for every single share that you own every single year. I do believe this company is overpriced at the moment, so I wouldn't buy it at the moment. Maybe just wait it for a little bit, maybe to consolidate, maybe in the next few weeks. If you see it drop maybe to 70 or 75, maybe around that, I would definitely get it. But at the moment, I do believe it's slightly overpriced. And in fact, if you look at simply Wall Street, what you will see is slightly overvalued. So if it was about 65 to 70, even 74, I think I would definitely get it. If you look at the future growth, is about almost 12%, which is really good. And we've already seen their dividend, which is 2.37. So again, if you're looking for a dividend paying, company that have been around for a very long time, this could potentially be a, good addition to your portfolio. And a lot of the dividend growth investors out there, even though that doesn't mean a lot to me, actually do own this company and they buy shares on these companies. And after I've done my research, at the moment, if I share with you the how many shares, I think I've got about 11 shares. Yeah, absolutely. It's up about 8% so far, which is really good. So I have been putting a lot of money into the company, and I will be doing that, hopefully maybe get to 20 or 25 shares in the next few months, inshallah. I'll see how that goes. And the other thing you need to look at also is Yahoo Finance, and at the moment this company is a buy, which is really good. So a lot of the analysts are saying is a buy, but I will say hold at the moment, wait until maybe just if you have it already, hold it, add to it, dollar average if that's what you want to do. But I will say to you, maybe just wait for a drop, and then like I said before, once it gets to maybe 65 and up to 75 or whatever, then maybe that's a good time to buy it. And again, I don't really know, I can't see the future, but inshallah we'll see how that goes. Okay, so the second company in my list is Kimberly-Clark. At the moment, they're trading 131, slightly over $131. I'm very surprised it's up today because it's been down for the last few weeks, and I'll show you how much actually in red I am. Now 10% down this year, market cap of $44 billion, current yield about 3.5, which is not bad at all. PE ratio of 16.66. Now that is really good considering what's happening in the S&P 500 at the moment. A lot of these companies are trading over forward PE ratios of 30 plus. Okay, this is really good to see. This tells me that this company is actually undervalued still, even though I think I did a video a while back, and it's still undervalued and still down. So maybe this is a great opportunity. This is one of those companies, if you go to the supermarket, you will see their products. Their products ranges from diapers, feminine products, and so on. So if you literally go to the supermarket, the aisles, what you will see is brands like Huggies and Pull-Ups and Scott and so on. These are basically brands they own. So they own loads of different brands, and these are some of their brands. Now if you go to valuation side of things, you can see it's undervalued at the moment, so it's trading about 130 plus. So I would say if you are looking for a basically solid dividend company that have been paying it for a very long time, has a great future ahead of it, then I will definitely add this to your portfolio. So at the moment it's slightly undervalued, so might be a good time to get in. Future growth about 5%, and like I've always said, these companies, they're not the Apples and Microsoft. You don't expect them to be 10% plus every single year. They are, they've been around, they will be around, and they will get you that 5 to 10% solid every single year. Plus, as well as that, very good dividend, like 3.5, which is really good to see. And their payout ratio is actually quite low. And again, if you look at Yahoo Finance, you will see that the analysts are saying at the moment it's a buy. It's almost a hold. I'm not sure why that is, but maybe in the next few weeks, if it goes up, prices slightly go up. Even though they're predicting that it's going to be about maybe $148 per share. Again, it's 130. That is basically a difference of over $10 per share. So that's really good. Almost $20 per share, more like. So that's really good, and I'm glad the fact that this company is one of my holdings. At the moment, it's really down. So it's been down for a very long time. You can see I'm down £162, or 13%. I'm not really worried about that because, I know I'm going to hold on to this company for a very long time. And when I say, by the way, very long time, I'm talking about 2 years, 3 years, 4 years, 5 years, is limitless. I want to see this through. I've only started investing about a year ago. I want to see this through maybe a minimum of 5 years, hold on to these blue chip companies and see how it goes, inshallah. All right, so the next company in our list is Pepsico. At the moment, 130, it's trading $135 per share, $185 billion, yield of about 3%, and basically will pay you $4 for every single share that you own in this company. PE 22 at the moment, which is not bad at all. Below 20 is great, but over 20, 22 it's okay. I wouldn't actually, I don't mind that at all. And if you look at the valuations, it's undervalued at the moment, so that's not bad at all. Maybe it's a good time to get in because it's actually went down in the last, I think, 3 weeks. It's been kind of going down here, and it goes up a couple of days and then goes back down again. So maybe sooner or later it might reach this where it goes up to at least $252. Again, just do your research, please. I'm not, like I've always said to you, I'm not a financial advisor, so please look at just do your due diligence before you start investing, inshallah. Okay, future growth about 7%, which is really good, and like I said already, is about 3% dividend, which is really good to see. Great management. They have a wide range of products. They've been around for a very long time. They've been paying their dividend, and one of the things I love about this company is the fact that they, when you look at the dividend, 48 years of non-stop basically paying growth, growing their dividend. At the moment, 7.8 payout ratio, slightly higher than the rest of the companies in my portfolio. Normally 61%. They've said, the analysts normally say about 61% is basically good. Anything above that is basically you should invest in, or you have to be really careful, or they might cut it and so on. But at the moment, 67 is not bad at all. 67 for a great company like this. I'm planning to buy a few more shares in the next few weeks, inshallah, see how that goes. And according to Yahoo, at the moment it's a buy, which is really good. Again, good to see that they're predicting it will be, the price shares to go up at least to 152 from 134 at the moment. So we'll see how that goes. And like I've always said to you, these are some of the companies that I have been, I've been buying this company, like shares in this company for a long time since I started investing. Almost every single month I buy a couple of shares here and there. So at the moment I've got 11.5 shares. You can see it's down 7%. My dividend for the year is about £29 basically. So I would be getting about £29 for basically the total shares that I own at the moment for this year. So we'll see how it goes. Like I've always said, this is a great company, and I've done quite a bit of analysis on this company, so I'm not going to bore you with it. So if you're interested, please have a look at, go to Seeking Alpha. There's a lot of information here. And again, I think a lot of, people have asked me, how to analyze these things. This is a free website. It's called Seeking Alpha. If you go to financials, for example, one of the things that I really love about this is that it will show you, in terms of income statement, it will show you total revenue. It's growing, okay, over $70 billion. You'll also get the total, the net income, which is important, okay, is down at the moment because 2019 and 2020. For 2020, we know the reasons why, but maybe 2019 something happened to the company where, total net income wasn't that great, or maybe they paid off some dividend or whatever it is. The other thing, you can also look at the balance sheet. So when you look at the balance sheet of a company, you will see their liabilities, you will see also their revenue as well. Okay, so if you look at if you not revenue, the assets. So if you look at the total current asset, okay, or go to total assets, in fact, okay, you can see it's growing. So at the moment they've got 92.9 billion, sorry, of assets, basically just to 2020. And if you look at the total liabilities, and this is basically how much they own, basically the things that they have to pay for. So they currently have $92 billion of assets and almost about 80 billion total liabilities. So they can easily pay that off. So they're not going to go quickly bankrupt or anything like that, or stop their paying their dividend or anything like that. So it's really good to see these kind of things. So if you're interested, just go to Seeking Alpha and just do a little bit more research. Again, what I'm showing you now is kind of quick overview. So the next company is Microsoft. I've done a video on Microsoft recently when they released their earnings. So that is on my channel. So have a look at that, please, if you're really interested. They're trading at the moment, 208.42. Some analysts that came out last night and they were saying it will go up to 250, 260. I wouldn't be surprised. It's a huge company, 1.8 trillion dollar company. Their dividend is not that bad at all. Okay, they do pay dividend, but it's quite small. Again, payout ratio of only 30%. They grow it, over the last for every 5 years, basically. For the last 5 years, they've been growing it basically almost 10%, and 17 years of basically increasing their dividend. So again, really good company. At the moment, surprisingly, they are undervalued. Okay, and I would not be surprised if they hit basically 250 plus in the next couple of weeks, if not next couple of days, because they're a really good company. Everyone loves this company. They do small dividend, but at the same time, I'm not really here for them just dividend. I'm also here for the growth, which is 10%. 10% is excellent. 10% from Microsoft, as well as that, the dividend is great. And if you look at the Yahoo recommendations, you can see at the moment is a buy, almost a strong buy at the moment. So it is undervalued. It's one of those companies where people love to buy this. Every single investor basically have got shares in Microsoft because they are a very innovative company. They will be around for a long time. And one thing I really love about this company is the fact when it comes to Microsoft Office, for example, right now they get revenue each year. The subscription-based model is really great. It's really, really good. From computer science, from coming from someone who loves technology, like, to be able to create the same product and every single month, every single year, charge people, hundreds of pounds just to use the same software by just tweaking it a little bit here and there. They have a great business model, and I think they will definitely be around for a long time. All right, so the final company and one of my favorite companies out there is Johnson & Johnson. At the moment, we're still waiting for the vaccine, for example. I want to see what they come up with. Apparently, is one dose vaccine. So hopefully, we'll see how that goes. The share price might go up by then, but at the moment, it's $165. $434 billion company, yield 2.45, and they're paying you about $4 for basically every share that you own. I do have this company in my portfolio. I've had them for a very long time, and I'm willing to hold on to it in the next few months, years to come. I've been adding to it, so at least at the moment I've only got 10, but my plan is to add maybe another 10 within this year 2021. At the moment it's slightly up about 6%, which is really good. They've been down for a very long time, and again, if you're new to investing and you see some of these reds and you start freaking out, honestly, listen, like Johnson & Johnson has been down for a very long time. Since I bought it, it was down, okay, and recently it starts going up and and this could happen to any of these companies. As long as you've done your research, you know exactly what you're investing in, right? And you've got a blue chip company that's going to be around for a long time, and because they had a bad quarter earnings or whatever, don't worry too much about that. Okay, hold on to it, You must have your strategies. So if your strategy is to hold on to these companies for at least 5 years, then do that. After 5 years, if you think, okay, maybe this is not working out, then you can change it. You can find better companies. So if 3M, for example, all of a sudden decides to cut their dividend and you're not happy with that, or they've done something crazy that you're not happy with, then you can always sell the shares and buy another company. So you're not obliged, you don't have to own these companies. Okay, but what I'm saying is hold on to it. If companies are down, don't worry too much about it. It will go back up. Trust me, it will go back up. How many people have lost a lot of money during the, when the crash happened in March? Okay, a lot of people kind of panicked and sold their shares. And at the moment, I bet you they're regretting, because the markets shoot up straight after. I hope you enjoyed the video. I hope you enjoyed the fact that I'm being transparent with you guys. Okay, I'm planning to do this here and there go through some of these companies. There are a couple of companies I haven't actually talked about, so I will definitely be doing a couple of videos. Every time I add a new basically a new company or new shares, whatever, I will definitely share that on my Instagram account. If so, click the Instagram, subscribe, stay tuned, and please share with everybody else. All I'm doing here is just sharing my journey, and I want to share my journey with everyone out there. So InshaAllah, you will benefit from it. And obviously, I'm trying to be transparent, but at the same time trying to make sure that what I'm giving you is quality. At least I've given you some information, and then maybe some of these companies you didn't know about it initially, and at least you have an idea what these companies are right now, and you can do your due diligence, do your research, find out a bit more, and then InshaAllah take from there. I hope you enjoyed the video. Please take care. Assalamu Alaikum.